Okay, so very good morning, and today's web session is about it's a wonderful web session. It's about day trading. Today we are going to solely discuss and focus upon day trading. Now this is one thing which everybody has a confusion about. Everybody feels that there is a certain degree of fog in their mind regarding the analytics, regarding the aspects of day trading. Now before we begin, before I start with my presentation and before I go ahead showing my charting software and showing examples from that and teaching about the trade setups, teaching about how to approach day trading, if you have any questions regarding day trading, if you have anything out there to ask me, you can first ask me that. I will start off with some questions so that the general nature of the crowd, the general ideas or the rooted thinking of the crowd can come out before I start addressing you. On your right hand side there's a question panel, so you can use that to ask me as many questions as you want. In case I'm not being able to answer, since I'm in the flow of talking, I will definitely answer it in due time within this webinar itself. Any major question, anything which lurks inside your mind regarding day trading? Okay, so yes, the question box is on the right hand side of your screen. You can just simply ask me a question. Right. So no questions, I assume. Is it? So moving on, I'll start with my presentation, and before I begin with that, what is trading for you? What is the approach you have towards trading? What is the outlook you have towards trading? Has got a lot to do with the quality of your trading output. Now you see, the way we are conditioned from a very young age, we have a huge difference in the real world when it comes to trading, where you can make money effortlessly compared to all the efforts you have put in your other fields of work or in your studies as a student, in your education life, etc. In trading, you can make effortless money within a few hours, like at a snap of a finger. Why? In other businesses or in other professions, it may take you toiling for hours and hours and hours. Now that is something what subconsciously is difficult to take. Most of the people, even the ones who come to me and the ones I read about, they don't lose money at first. Most of the people first make a lot of money and then they lose money. Maybe not a lot, but maybe a sizable amount of money, and then they lose money and then they wipe up their accounts. How many of you agree with me on this? You can raise your hands. Have you experienced something like this? Right? So the thing is, today people are intelligent. It is not that people don't know things. People are intelligent. People do seek to find analytical and high probability ways to trade. But what tends to happen is that it does not have a lasting effect. If it does not have a lasting effect, how would any time consistency be possible? Right? Now there is a method, a mechanism to create a lasting effect. So 50% of our discussion will revolve around how to create that consistency, because I feel to address that is equally more important, or in fact equally important. In fact, it sets the entire backbone of all the technical strategies. What is the mind that you bring to trading? Now the mind that you bring to trading is a hardwired human mind, And this is hardwired from millions of years, from prehistoric times. And from those prehistoric times, where man was more used to going and hunting, was used to the fight mode, the certain parts of his brain and psychology, for that it was very useful for him to be in the flight or fight mode. Today, in trading especially, it is something which can act against you. And when you are under stress, or on a general day with a fresh mind, you might be like, okay, let me just follow my plan. Let me just trade. Let me just do what I'm doing well. But on a general day, when you undergo some stress, say because of a loss, say because of some other issue, say something outside of trading, under the stress, the brain will fall back into the hardwired patterns, right? At that moment, it will be very difficult to gather the perspective. So first to do is to address a perspective to you. First what to do is to address a perspective. If you can address a clear perspective to yourself also, time and again, most of your work is done. Most of your work is done. Now, when we start about technical analysis, when we talk about technical strategies, what are technical strategies? Now someone comes and tells me, let's not talk about just day trading at the moment. Someone comes and tells me, you know more, this is a company, its value should be around 500 rupees, but it is trading at 100 rupees right now. So I'm like, okay, great. So value should be 500 rupees, it's trading at 100 rupees. So I said, you know, it's like a very good buy over here right now, and I'm going to buy it and hold on to it for some decade or something. Like, great. So that comes from a fundamental analyst friend of mine, and he's excellent in what he does. Excellent at what he does. And I happen to not be comfortable taking a purely fundamental advice, and I say, okay, fine, let me just keep this stock on my radar. After 6 months, the stock becomes 80 rupees. After another 6 months, it becomes 100 rupees again. And then after another 6 months, it starts moving beyond 120. And I enter at 110. Now my friend, 1.5 years of difference. Like, he bought it 1.5 years back at 100 rupees, and I buy the same thing at 110 rupees. 6 months after myself buying, the stock is now 250 rupees. I exit the trade. My friend is holding on to the long-term position, long-term investment. After I exit the trade, the stock retraces or goes back to 200 rupees. Now the entire idea what I'm trying to tell you over here is that the quality of your trading, number one, depends on your timing. Number two, there's only one thing which is real: price. Price is real. You can talk all numbers, you can talk about economics, you can talk about RBI policy. Those things are stories. What defines how positive or negative your M2M will be, what defines how much you will make or lose on your PL, is the price, nothing else. Now a lot of people find it difficult to digest the fact that technical strategies even exist with some validation. Over the years, about 9 years in this business now, out of which 3 to 4 years were very hardcore learning. I would take up anything, read anything on trading. From the morning I would wake and find something to read, or the little things I used to observe around me, and I would correlate everything with trading. And in the end of so much reading, more than maybe 200, 300 books, so much reading, so much knowledge imbibing, one thing I realized very clearly. I realized that the 99% of the things I read about trading were not useful. Today, when we go out there, we Google stuff. Before being a chartered market technician, I was busy Googling stuff and finding out how I could apply technical strategies. There were very good things out there also, but they were not effective. They were not lasting. And when then these things were not lasting, what ended up happening is no matter how much I tried, I could not gain that consistency. Neither could I pick up the best of the moves. So my journey, to share with you before we begin, starts from here. 9 years back, fresh into college, from the very first year of my college, I began to trade. I had a background of technical analysis because my father had some books on technical analysis, and he was a market enthusiast and still is. So those books on technical analysis, just like children, if any of you have children, they will end up reading books if there are books around. They'll end up watching movies if somebody watches movies at home. So at home, everything was CNBC for me, and I ended up developing a passion for the markets. So I picked those books up, and it was something very, very lucrative, something very creative. Those ideas were written over there. I had decided at that point that I have to do something with this in life sometime. In the first year of my college, I began to trade, and I was a complete novice, a complete amateur, but I was so fresh in the mind that I could apply everything clearly. Obviously, under the stress, even my hardwired brain came out very soon, and I did a lot of stupid things, which for today, a lot of people come to me to get consultancy. I did a lot of stupid things. So you see, when you make a mistake, you learn it. You get an experience. And when you make a lot of mistakes, you become a trading coach. And that was somewhat like my journey was in the first few years. One after the other, mistakes after mistakes, making money, losing money, making money, losing money. There thankfully did not come a point in the beginning where I could lose a lot of money because I was very young with low capital. But irrespective of the quantum of money, the ups and downs were the same. And therefore, the way to handle them was also the same. And over the years, I educated myself with chartered market technician. I educated myself with CFA. I was into the markets and working. I worked as a technical analyst and research arm of brokerage firms. I have worked as a trader in prop trading firms. I have spent a lot of time, until today also I am connected with a firm in Europe. I'm connected with a lot of people out here who learn from me trading, and the entire cycle of my learning is now come to a place where it can be used to inspire others. In the process of technical learning, one of the major things and major learning curves have been, and in my plethora of knowledge of even the people I know, not all technical analysts can trade very well, and there are reasons for it. Because it is not just about technical analysis. You see, it's not just about technical analysis. It is beyond that. How many of you even acknowledge that it is beyond technical analysis? There is some element of psychology that helps you, drives you to execute the strategies better. You can raise your hands to show me. How many of you even acknowledge the fact that technical analysis is not the only thing, right? The very few people who acknowledge, well, I'm a bit surprised, but nonetheless, now you learn today that as a professional trader, and among about more than 150 professional traders I have been fortunate to witness, having them sit near me or around me or next to me, more than about 100 students, 200 students, including the masses, the bigger groups I have taught, and I have noticed and seen, observed, every week people come to me for psychological consultancy. The strongest emotions that exist in the entire world, if it is for anything, irrespective of anything, the strongest emotion is not for love, hatred, friendship, family. It is for money. How many of you agree on this? You can raise your hands. The strongest emotions that even exist are for money. Today, when people come to me of different age groups, different backgrounds, I can clearly notice what are the things they are facing issues with, what are the problems there are. Over the years, psychology has been inevitably the most important thing for me in trading. Now, and this is after learning the depths of technical analysis to a level, because my passion is for technical analysis and market. My passion is not for trading. That is something I make very clear, and that is something I teach also. The more you have passion for trading, the more you will feel the pain when you are wrong. Agree or disagree? The more you have passion for trading, the more you will feel the pain, right? So people who have passion for trading do not realize that the passion should always be for the markets. The passion should never be just for trading. Trading can be just about 5% of the action you take with the markets. 80%, 70 to 80% of the action, 70 to 80% of the action you take with the markets should always be waiting. And how many of you agree with me on this? You can raise your hands again. The quality of your waiting, the quality with which you can wait patiently, defines how well you will trade. Some people raising their hands. The others could also answer this question if they are compulsive traders. Do they feel the compulsion of taking 2 or 3 or 5 or 10 trades every day? Do you? Do you? You feel. Do you want to change that habit? Do you want to change that habit? You want to change that habit? So if you really want to change that habit, there are a few very crucial things you will need to do. You will need to address yourself certain things extremely clearly. You will need to reaffirm that kind of clarity to yourself again and again, time and again, until it becomes second nature. Until it becomes second nature. Now, what is the broader idea of being a day trader? Right? What is the broader idea of being a day trader? It is to trade during the day. During the day when the market, we are considering the equity markets in India at this moment, or for any country for that matter. As a day trader, you are supposed to be trading for the day, right? Don't carry forward the hang-ups of profits or losses, or rather the weight of losses and the overwhelm of profits to the next day. Within the day for you, the market is nothing but a money vehicle. The market is nothing but a money vehicle. How many of you still find yourself difficult to buy something at a higher price which you shorted at a lower price? A few days back you took a short trade on Nifty at 10,000 and you find it very difficult to buy Nifty right now, even for intraday. You can raise your hands. You can raise your hands. Your social conditioning has always taught you one thing. There's something which goes up in price, its demand decreases. So therefore something that goes up should come down. The social conditioning of microeconomics has also taught that something which goes down, for something whose price goes down, the demand increases. And in markets, if something rises in prices, if something rises in price, the demand actually increases. And something falls in price, the demand decreases. Trends last because of that. How many have shared the shell of the social outlook you have of economics and prices of everything else around you? Once you get out of that shell, you will understand what the technical outlook is about. Am I resonating with you? Am I resonating with you? You can ask me any questions in between, right? So you need to get out of that shell and develop a technical outlook for the market. The second thing which you need to develop is a money vehicle outlook. For me, if I miss the trade today, when Nifty will go from 9,200 to 9,300, for some reason I missed the trade today. I had some other positions. I was not on my screen. I was off for the day. I had fever. I had taken an opposite side trade for that matter. But I see a fresh signal at 9,350. 10,350, which will take it up to 10,500. Do I take that signal? Do I find myself in a difficult position to think while taking that signal? No. For me, it is about price traveling from one place to another. Whether it's going up, down, if it's going further up, further down. When the price travels from one place to another over the x-axis of the chart, that is over a period of time, I should be able to capitalize on that. Now if I missed a part of it, now if at the end of an entire bull market, if I find myself in a position where I have not made money in the last 1 year, how many of you feel like that? How many of you feel like, the weight of the fact that the entire bull market has gone and I haven't really made that kind of money in trading? You can raise your hands. In futures and options, you have not made that kind of money. You feel like that? I really appreciate the people who are raising their hands right now. Really appreciate. That is the kind of honesty you want with yourself if you want to really crack the code. That is the kind of honesty you want. The entire world is very busy, blowing the trumpet of their profits if they make money. But it is very difficult for someone to really overcome the embarrassment and accept the fact that, okay, I lost money or I didn't make much money. I missed the entire bull market. I was in front of the screen, but I did something wrong. But I now know where I was wrong. So for those who have that little pain or little embarrassment or little anxiety of the fact that so much has gone by and nothing has been made, if you come and put yourself in my shoes, the asset classes I keep a tab upon throughout the day, throughout the weeks and months, the asset classes I have the availability to trade, and the number of trades that unfold each and every day, or within a span of each and every week, sizable trades, sizable moves, even intraday, lots of moves. If you want to sit with regret, there's no end to it. Because in my position, I won't have any end to it. I'm a human being. I can't take like 50 trades in a day. But because of my human creativity, I can capture those 50 trades in my mind, conceive them in my mind, and maybe a good number of them I can capitalize on during the day. So if you acknowledge a little bit of the fact that maybe you missed something, but in the end, it was never about the bull market or the bear market. It was only about the markets being a money vehicle, markets being a platform for you to make money out of your trading business. Right? Number 3, one clarity of thought, which extremely I feel is something one should really stress on, something which people miss out on at a very big level. It is never about a single trade. It is always about a series of trade, right? A lot of people are born with a perfectionist mentality. Over the years of education, and especially the ones who are really educated, I have had friends who have been less on the side of mischief and have been more on the side of education and discipline. I found them not very comfortable when it comes to trading, right? Uh, Trading requires you to think in a probabilistic manner, and we are wired to think in a perfectionist manner. If I do something, if I'm sure of something, I will go ahead. But what if there is a chance that I'm not sure of something? There will be hesitation. There will be hesitation. The overall process will be corrupted in between. Once you understand that it is not about just one trade, it is about a series of trades, you can maturely understand the probability that is associated with each and every trade. The simple probability which is associated is really never about how 100% right you will be. So that you don't put all your eggs in one basket, you don't put all your leverage into one trade, you take a part of it. So suppose you have a account size. Anybody, quick, just write me a number. What is the size of your account? Just write anybody number, any imaginary number. One lakh, 5 lakhs. Okay, great. No problem, thanks. So I'll take about 1 lakh. Okay, so I'll take 1 lakh. So suppose 1 lakh is your trading capital. I think for day trading, if done wisely, this can be sufficient for someone living in India and wants to derive an income from trading also. I think it can be sufficient. Now, if you do it the right way, even if there are some mistakes in between. Now, in this 1 lakh capital, two things you need to account for. When I talk about a series of trade, I tell you that I'm a technical analyst. I love technical analysis. This is my basis of trading. I feel everybody should have a basis of trading. However, my basis of trading on a trade by trade basis may not be right every time. But on a series of 20 trades or a series of 10 trades, I will net out in profits. I'm confident about that. Right? I will net out in profits over a series of 10 trades or 20 trades. One more thing I cannot say. One more thing which I cannot say is that there could be spaces. I cannot pinpoint a sequence where I'll be right. So I can say that I will be right at least 70% of the time. Maybe I have a better hit ratio someday. Some weeks or some series of trades. But 70% of the times I will at least be right. This is my record. So this is how I look at my strategies. And this is how they have worked out for me in the past. Now, in that case, out of 10 trades, that means 3 trades will be wrong. I cannot put a finger and say what is the sequence in which they will be right or wrong. And therefore, I may have. Am I audible? Someone is saying that I'm not audible. Maybe problem is there because here it's showing. Other people, please confirm. So I cannot put a sequence. I cannot point a finger and say, okay, this is the sequence in which I'll be right or wrong. But I can do one thing. Whenever there is a cluster of losses, I can be ready for it. Whenever there is a cluster of losses, I can be ready for it. So if I'm ready for a cluster of losses in a series of 10 trades, I'm ready for 3 continuous losses. That means my quantity or my position sizing discipline should be such that I don't put all my eggs in one basket. How many of you are understanding what I'm trying to say? That means that on a 1 lakh rupee capital, if I'm taking a stop loss of 3,000 to 5,000 rupees, in my intraday trading. It's fine. But if I'm taking 3 to 5,000 rupees stop loss, 5,000 into 3, it's the drawdown of 15,000 rupees should never bother me too much. We will discover more about these. Next point is to approach trading as a business. Now, this is something which people have a very difficulty to understand in the beginning. You see, you are opening an account, you're putting in money, right? When you open a business, what do? You open a current account, you get some trade license, maybe you open some infrastructure, some office, maybe a store, maybe some godown. It's easy to set up a business, it's difficult to build a business. Similarly, it's easy to open a trading account. It's difficult. It is difficult to make a small number into something more tangible. If you approach it from that thought process, it will help you in many ways. Let's discover how it will help you. I spoke about acknowledging the mind that you bring to trading. When you understand that you're doing a business, every businessman has a stage, one phase after the other. One grows through layers and layers of learning. It is not an overnight journey, it's not an overnight process. Now suppose one of you, say for example, Deepak ji. Now Deepak ji starts trading intraday. And when Deepak ji starts trading intraday, he grows his account, say from it's a 1 lakh rupee account, in a matter of a few weeks, 1 or 2 weeks maybe, 3 weeks maybe. He makes that 1 lakh into 1,50,000 rupees. Very nice. He feels good about the returns he's got. And at the end of those 3 weeks, there comes a cluster of small losses and he loses 20,000 rupees. Right? So when it came to making a 50,000 rupee profit in a matter of say 2 weeks, we especially men, I feel this is a very manly thing, and this is a very natural instinct among us human men. Whenever we make some money in a certain given period of time, we start multiplying that with the number of days in the month. Raise your hands if you do so. So when you make money, say you made 10,000 rupees today, you say, okay, I can derive 2 lakh rupees. If I keep doing like this, I'll make 2 lakh rupees in the month from markets. You made a 50,000 rupee profit today. You start thinking that, okay, by the end of 20 days, I can have actually 10 lakh rupees, right? I'm not saying that it should be done. It should never be done. What I'm trying to say is that the tendency to project your future from your recent past is very heavy, even in case of losses. So when he makes 50,000 rupees at the end of 2 weeks, and then he loses 20,000 rupees, the weight of the 20,000 rupees lost, which is not much, but the weight bears heavy on him because he had already made an image of himself in the mind that if I can make 50,000 rupees in 2 weeks, I will make 25 lakh rupees from the market at the end of this year. Are you resonating with what I'm saying? The self-image which is created. Absolutely. Absolutely. That's what I'm coming to, Deepakji. So Deepakji says that every day is different. Well, that is true. Every day is different. And that is why I took a 2-week sort of time horizon. But yes, every day is different. Secondly, what I want to say is that at the moment, when you take trading as a business and you take trading as a business which you are in the process to grow and keep growing, at that point, be it any one of you, you can just calm yourself down by saying that I have just started out. You know, I've just started out. I've just started out. Maybe I've just crossed the novice stage. Maybe I'm becoming consistent now. I'm beginning stage where I'm, learning how to act as a trader in the capacity of a professional trader, take out money. and then you work up your level to this stage. You know what the magic is? The magic is that whatever standards we set for ourselves, we end up following through our actions on those standards. For some people, not losing money is the standard. For some people, not losing money is the standard. Agree or disagree? At the end of the day, even if I don't lose money in the market, I'm still okay. So for some people, making consistent money is the standard. For some people, making big money is the standard. Whenever you set your standards, how you set your standards in trading really defines what the actions will be. An approach from a business point of view can lead to not just apply yourself more, but in the process, the most important thing you will be able to do is to set yourself a higher standard and don't overly criticize yourself. Any questions in between, you're welcome to ask. Now, one thing before we begin, over here, all of you who are present, if you have any self-sabotaging beliefs with intraday trading, raise your hands. Anything which says, okay, no, this is not possible. No, this is something I'm really angry about. There's something, you are feeling some stress. You can raise your hands. Great. So you acknowledge this and still you are here to learn. That means you are here to remove your mental blockages, right? See, mental blockages are not just important for the people who are stepping into trading, but mental blockages are something which need to be dealt with even by the professional seasoned traders. Okay, so there was this wonderful trade I was discussing with one of my friends, his trader friend, a little senior to me also. And what happened is that I was discussing some trade, and then I was like, I can perceive this looks nice. And the other person told me, there's another trade which is I feel better. I was like, okay, let me have a look at it. I saw the charts, and some way or the other I felt I can take this trade because this objective decision making has been done for me. It becomes easier for us to listen to someone else and make objective decision. इसलिए हमें लगता है ना that कोई हो हमारे को कॉल देने वाला, right? Now that was a better trade, and maybe had I not seen it through someone else's eyes, I'm not talking about my case, I'm just giving an example. I'm saying that maybe if someone does not see from someone else's eyes, it will be difficult to perceive the good opportunities because of the mental blockages. Now I have some statements from you guys coming in. So Deepak ji says that there is worry lingering in his mind because he lost 80k in intraday. Lost 80,000 rupees in intraday. Okay. Parag Khara ji says, I guess I have a certain mindset that wealth can be created only if you're in stocks for long term only. So intraday trading becomes difficult and also constraints. Okay. Thank you for sharing these wonderful ideologies. Why the root cause of Deepak ji's worry or pressure in intraday trading is that he lost 80k in a day. Okay. Now this 80k in a day, 80,000 in a day loss. Before that, had you made some money ever in intraday trading, or was just a series of losses? By the time you answer the question, I'll read out Parag Haraji's statement. He said that he has a certain mindset that money can only be in long term. Now the thing is, there's a difference. When it comes to long term investment, I'm not differentiating from the technical analyst's point of view. I'm just differentiating from the mindset point of view. When it comes to the long-term investment, things are slow. Okay. So if I give you a certain amount of risk and say you take this risk over a period of 10 years, you are mentally more calm in perceiving that, to execute that. Whereas if I give you a certain amount and say within the next 3 hours you will get to know if you are a profit or your stop loss. The mental capacity to deal with that speed of money coming and going is something which you just need to get conditioned to. Something you should get conditioned to. Now, when people come to me for training, my entire job I feel is not to really over pressurize them to outdo themselves, but to get them conditioned to do the right things. So conditioning yourself for the right thing is very important. If you condition yourself for the right thing time and again, you will go back to that pattern naturally. How I tell you. So there was a student who came to me. He comes and says, you know, I want to trade intraday. I've learned. I'm going to learn from you. After 2 months of learning on our online course, he said, you know, that I'm ready. I've been practicing a lot. I've stopped trading for a while, and now I feel I should really go ahead and do this. I was like, great. He kept me. A week later, he reported to me like, you know, these were the kind of trades I took today. This is nice, and this was high probability. Those were small loss here and there. They took about 5 trades in the week. Out of those 5 trades, 3 were correct. One did not lose much, did not make much, and the last one was a small loss. So I was like, great, this is wonderful. He told me, sir, I'm happy, but the thing is, there is so much more I can do. I told him, you know, you take 1 or 2 trades a day. He took 5 trades at the end of the week. And he says, there's so much more. I was like, you made money and still you are unhappy. What can be worse than that? You made money and you're still unhappy. What can be worse than that? Now, this is where we get caught. This is not a greed. This is an intellectually covered greed. My agenda of telling him to take 1 or 2 trades a day was the fact that he gets his mind conditioned to preparing for a trade, to have a plan of action, well thought of plan of action, prepare, take the action, a quality trade, close the trade, take a break the next day, come back. The mind sleeps over the profits, mind sleeps over the correct trades done, the correct things done, not addictive behavior, not over trading, not impulsive trading. The mind sleeps over the right things done again and again. Your mind gets conditioned to do the right things. To be able to execute something in the speed of intraday is possible if you condition your mind to it. For long-term investment, you don't have to condition your mind too much, right? Those things are easier, or at least seem easier. Even they have their own challenges, I'm more than sure. And I actually believe that there are more challenges and different kind of challenges when it comes to long-term investing. But there is an illusion of the fact that long-term में तो market ऊपर ही है. I mean, I'm not saying that ऐसा नहीं है. हो सकता है ऐसा ही रहता रहे. But the thing is, that particular stock which you are in may become a Satyam, may become a Divis Lab. Are you getting what I'm trying to say? Those factors will still always be there. That advantages and disadvantages of both the things. There are many ways that money is lost from trading, and many ways money is lost from long-term investing, and many ways money is gained from both the things, right? No, Deepak, my laptop battery is fine. I don't know if saying something. I think it's your laptop battery. Anyway, so I'll read out some more statements. So I hope Parag Ji's I have addressed properly. Then it comes to Mr. Deepak said that one trade in BPCL he did not put stop loss, and it was not a series of trade, and he hates intraday because of this. Because within the day, okay, now this is a control bias, illusion of control, right? So he did not put a stop loss. So you shorted BPCL a few days back, is it that? So he did not put a stop loss, and what happened? Okay, so I was long on that trade. I remember that trade. Nonetheless, he shorted something, it was rallying up. What was the basis of you taking the trade? What was the whole basis of you taking the trade? Now this gives me an opportunity to take up this example, and obviously more examples and more learning is to be done, so don't worry about that. So this is the daily chart of VPCL. And are you talking about this day or are you talking about this day? So let's start with this. I know a lot of you have not learned from me technical analysis or may not have much background in technical analysis, but I will try to make my discussion as simple as possible. Let me ask you just one question. What is the overall trend from here to here? The overall trend is up, right? The overall trend is up. And you were in a trade where the overall trend is up. You were in a short trade. A very basic rule, the first rule, right? The first rule you were against. Maybe you have to look at what were the factors that told you that it is wise to be short over here. Maybe you thought that something which has gone up must come down. Something which has gone up must come down. These resistance zones were taken out pretty handsomely, and there was a strong up move with great volumes. A series of higher highs was there. So there was not much reason for yourself to go short on there. Technically speaking, I mean, when I'm just taking the basics, I'm not even going high, why should be a clear buy? There are many things which were telling us this should be a clear buy. Let me just put it simply to you, because during that time I took another trade, I remember. So if you just mark the way, the mark how this candle, these two candles are, and just hold this picture in your mind. Hold this picture in your mind. And I'm marking this for you. Do you see a similarity? Now, one thing with technical strategies is that, everything is not textbook. Everything is not textbook like. We are not even doing candlesticks. It was just a random example out of a random question. Things are never the same. They are not stencil like same. They are not textbook like same. Things are always similar. Things are always similar. Right? On a very basic level, if your trade basis was wrong, you cannot blame intraday trading or the idea of intraday trading for your loss. The first step to take a loss is to take full responsibility of the loss, no matter what. I'm understanding your openness and appreciating your openness and honesty to share all this with us. But on a very core level, there needs to be some structural changing on the basis of your trading. So, all your self-sabotaging beliefs, all the resentment, all the regrets, and the different emotions regrets bring about, anxiety that is brought about, all these are very easily tapped into by one experience. So recently, there's an office I had rented for about a year, and I just cancelled my contract from that particular office. And the last day I was walking out from that office, I happened to look at that building. I was like, there's nothing special about me leaving this place, because this was, I only had taken it on rent. There is no organization I was involved with. There was nothing really emotional about it. It was just a business decision that, I will work from another office. That's very simple. But the days I spent there, obviously in and around other offices, I made some friends, etc., etc. There were some, there were some really nice things to look back to. I had some friends' office nearby also, etc. There was a routine. I used to take a route to that office. The food I used to have nearby, all those kind of things. But that also triggered with it a lot of memories of the previous, some organization I must have left, of a previous school or college I must have left. You realize one thing, what I'm trying to say is that when you feel an experience, it reminds you of a similar experience in the past. Agree or disagree? Raise your hands if you agree. It reminds you of the similar experience in the past. So now the next time you take a trade, the trauma of losing 80,000 rupees in a trade may come about in a difficult manner, and that trauma may make you act and make you not execute even a correct trade very properly unless you take the loss in the right perspective. As a trading psychologist, just advising you a few things on taking a loss properly or taking a profit properly, perceiving things properly is something extremely important. I can't underestimate the power of taking a loss in a healthy manner. And when I mean taking a loss, it mean taking a loss without any worry, anger, anxiety, without any shame, embarrassment, pity or self-pity or regret. And with the full responsibility that from now, I will not be disoriented. Willpower is any day more powerful than anything else. So if you have any self-sabotaging beliefs at a different blockage levels, so it's not a psychology webinar, so I'll not discuss that part right now. But at different blockage levels, if there are self-sabotaging beliefs that limit you to even capitalize on the opportunities which are nice, which should be taken, you're not doing your business the right way. When I say business, now you put that in perspective of a business decision. What is good for your business? To be doing that or not be doing that? There was a dialogue in one of the movies, right? जो धंधे के लिए सही वो सही, जो धंधे के लिए गलत वो गलत. How many of you perceive it that way? Or do you let your emotions come in between? Right? Perception is everything. Now, let's develop an overall approach to day trading. What should be? Till now we discussed all the confusions, all the different kinds of things which are there, perceived in an incorrect manner, some in a correct manner. We also laid out a few examples in terms of talking about just technical analysis. A lot more to be done. Now let's see what is the right thing to be done. Now that we've cleared out some clutter, let's see what the right thing is to be done. Speaking of clutter, the picture representing on the right hand side also involves a funny pothole, but nonetheless, have a daily routine. Point number one. Trading is one business which gives you financial freedom, and I don't know how many of you are professionally doing what, but financial freedom is pretty overrated. Freedom is pretty overrated, and routine is a little underestimated. If you discipline yourself with a daily routine, what happens is that you train your mind to be disciplined. How many of you have done a morning walk continuously for 3 to 5 days, or gone to the gym regularly, or done some exercise regularly, and feel good about the fact that you did so much? Just that you did it makes you feel very good. Right? It feels good. A daily routine is something like that for you. Number one. Deepak ji says it goes to the gym daily. Right? Logistics are important. Have an internet backup. Have a good computer. A good RAM, good configuration. If needed, have an extra computer. If needed, have more than one internet backup. Have the facility to even call your broker sometime. If not, just trade online. If it's a good online trading platform, use that, no problem. Have a separate space where you trade from, where you focus from. Intraday trading requires a certain degree of live decision making and live market analysis. Know what you're going to eat as a part of daily discipline, daily routine. Logistics is extremely important in terms of what is the software you're using for your charting, what are your eyeballs set to. I've seen many people come to me with a very bad history in trading, and then they criticize and tell me इसमें होता क्या है, हमने तो पैसा कमा, इसमें तो पैसा लॉस ही होता है. आज जैसे आपने मेहनत कितनी की, आपने प्रिपेयर कितना किया, right? If you do it in a disciplined manner like a professional, you will end up reaping the results. So first, have a nice desk. That consciousness of that place, what you do over there, what you think over there, a bit of silence, a bit of clear thinking. I keep a whiteboard in front of me, so I have a whiteboard marker and I write things down. I make some small notes. That works for me. You can do what works for you. I try to eat light. So in the morning, I have very light, some fruits maybe some chena, what we call in Hindi, and maybe a cup of tea early in the morning. Nothing more than that. Do some light stretching exercise. Do some deep reading to stretch my mind. Have a nice bath and sit calmly with trading. So my day starts at somewhere around 6 o'clock, 7 o'clock until by 9. I have done a lot of disciplined work and stretch my mind and body in, just to prepare it for the day. Some meditation for those who meditate, for those who feel the need, those who don't feel the need also. Meditation is extremely effective. Why? We'll come soon to that. Now when I sit with the markets from 9 o'clock onwards, I also have trades open and executing throughout the day, because international markets are also things there where I do things. But moreover, 9 o'clock, let's just talk about Indian markets. So 9 o'clock I sit, I calmly look at what is going on, what is happening. I'm discussing from a day trader's perspective. So there are no position, the mind is free, the money is liquid, and you are in a space, or I'm in a space where I can take any opportunity that comes my way. Now from 9:15 when the market opens till about 10 o'clock, there may be an opportunity, there may be not. There, on some days the opportunity starts in the morning, on a majority of days, like for example, in certain market phases about 40% of the days, in certain market phases about 70% of the days. The real opportunities come after 11:30. So you need to keep a tab on what phase of the market you are in, technically speaking, and how much of the open, how much is the strength of the trend, how much is, what are the different instruments you're trading, is it stock specific that you're trading, is it some major bigger time frame signal you're waiting for, all those kind of things. For all those kind of things, at 2:30 there could be some move which is purely intraday. There could be something happening because of some some other global event or some global market opening at a certain point in the day. Now I'm not talking from a day trader's perspective where you are a scalper. You may be doing that a little bit also, but no problem. Those things apply to you as well. If you're doing very quick scalping on high quantity, productivity versus effectiveness. So when I give the screen time throughout the day, my agenda is not to just click and play tabla on my keyboard, right, to trade. Or neither it is to hold on to one trade. See, both these things get you losses. Either you take a lot of trades or you take one trade and lose a lot of money. These are the root cause of having a completely downtrending business in trading. If you can just stop doing that, right? Thanks for the laughing. Yeah, if you can just stop doing that, you're done. You sorted. So I have to give effective screen time. Now, for that, I don't need to overdo. On some days, there may be nothing happening in the market for the entire day. I need to just sit down, dress up, show up, and sit there until that opportunity arrives on certain given day. On a certain given day, you can have about 7 to 8 very high quality trades. It is not recommended for anyone to take beyond 4 to 5 trades in a day, because when you do that, you realize that you're exhausting the decision making capacity of your mind. Trading is a controlled decision making process. The mind has a limited capacity in a limited span of time to make controlled decisions. Are you guys resonating with what I'm saying? Raise your hand if you understand what I'm saying. The capacity to make controlled decisions is limited. It is not that every time it has to be profits that can lead you to more profits, and it is not always that every time there will be losses which will lead you to more losses. Okay, even after a very good number of profiting trades in the day, one can see a loss. Now, how many of you, let me just ask to get an idea of how much successful trading, even to some degree or good degrees, have been done by the participants. How many of you have made something like, say, 10,000-20,000 rupees in a day, or 50,000 rupees in a day, whatever scale you trade, and lost more than half the amount by the end of the day? How many of you have seen days like this? You can raise your hands. I have seen this. It's been a huge learning curve. So you have acknowledged the decision-making capacity of your brain has come down after making some trades, taking some trades. And I'm getting some statements from people. Somebody lost 25k one day, somebody lost 45k in one day in some stock. I think with all the examples which is coming, I need to address something very important right now. So Murli ji says that he lost 45k in KTK Bank, and the next day he lost 22k in the next day also, right? So a lot of honesty is coming out. Prince says that he lost 25k once. So what I'm trying to say is that Murli ji, after losing 45k in a day, you probably were not in the mental state to trade for the next day. Did you acknowledge that? Did you acknowledge the person who's coming into the trading strategy also? Okay, Murliji says that he got 45k and the next day he lost 22. So 45,000 rupees in a day, Murliji could not subconsciously digest the profit. Is it fair for me to say that? It is important to understand how to absorb profits. Murliji agrees. He agrees to the fact that making 45,000 rupees in a day was too much too soon for his subconscious level of thinking. We are conditioned to believe mahine ka salary, mahine ka kharcha, mahine ka income to associate time with money. Therefore, it becomes very difficult for us to absorb a lot of money coming in very less time. And markets do that for you. Markets do that for you. But now you know what is the point we are missing. So after a good winning streak, if I have had like a series of profits one after the other, just to extend that winning streak, if I feel a little overwhelmed with the recent performance I've done, I accept and I acknowledge the fact that I should take a break. Even if it's a day off, I should just calm my nerves down and reach a healthy level of performance. And it's not that I do it in after every 3-4 days. It's not that I do it every week or every month. I do it every single day. Every single day, I spend about 2.5 hours in the evening just to make sure that I'm ready for the next day. And for me, that is the work. Uh, Thankfully, there's been years of practice and mastery in technical analysis. So that is not a real problem for me. There's a lot of time I've given to the market, so I have a knack for the market also. But what I really focus on is my mental state. It's something very direct. If you're in the right mental state, even the worst of the markets can make you a lot of money. And when I say worst of the markets, I mean low volatility, noisy moves, etc. And if you're not in the right mental state, even the smoothest markets with smoothest opportunities, you will not be able to capitalize. Is your screen time effective enough? Are you being able to acknowledge that maybe you're sitting from 9 to 3:30 and there may be no trades? And are you being able to at the same time acknowledge that you're sitting from 9 to 3:30, there may be a number of opportunities and you can capitalize on most of them or all of them? They can be radically opposite days. You have to sit there without expectation to be effective. Agree or disagree? Sit without expectation to be effective. There's more to come, Mr. Hari. The next point is position sizing. Position sizing. How many of you increase your position size after 2 good trades? How many of you increase your position size after 2 good trades? This is a very common mistake everyone makes. Agree? दो trade अच्छे होते हैं and then you start thinking I need to grow. Over here I will address important point. Are you trading for income? Are you trading for growth? Are you trading for income? Are you trading for growth? Deepak ji says that after one profit increases his open position size. And when I asked him, are you trading for income or growth? He says both. Murli ji said that sometimes sitting and observing the market is your profit. Well, very correct. Sometimes having no position itself is the best position. And increasing your position size after one trade is very dangerous. You should not increase your position size for at least 2 to 3 months or at least 1 month. I tell you how it goes. So say you have 1 lakh rupees as a trading capital. If you trade for income, you would like to take out anywhere between 5 to 20,000 rupees. I'm being very conservative. These numbers can be big. And let's just make that 1 lakh 2 lakh, because these days the margins are such that 1 lakh may not be sufficient, right? So anywhere between 5 to 20,000 in the right trade. If you wait for the right trade, it will give you something sizable for a 1 day trade profit. So the incentive to wait for it remains. Now there will be someone who says that I will trade for growth. So the moment this 2 lakh becomes 2 lakh 20,000, the moment this 2 lakh becomes 2 lakh 50,000, the position size goes up. But do you realize the person who made 2 ka 2.5, if you are the person who made 2 lakhs into 2.5 lakhs, you were in a mental capacity. Your mental capacity was to trade a 2 lakh rupee account very well. Immediately after 1 trade or 2 trades, it may not be so that your mental capacity to take trades on a 3 lakh rupee account is the same. Agree or disagree? Right? So your mental capacity to handle a 3 lakh rupee account may not be conditioned. You're conditioned to a smaller account. So your head can be going there in the cloud, all in exuberance. You will eventually grow if you are trading well. But don't trade for growth, trade for income. This is the best thing I can tell you. You know, if for a lot of you this will make a major difference. Don't trade for growth, trade for income, because it is about a series of trades, right? Last point, well-defined lower limits. You know, there is a point that after maybe one trade or more, maybe two trades or three trades or five trades, and if most of them or all of them are losses, there will be a dollar amount, a rupee amount, which would be the defined lower limit that I will not lose more than this. I can do anything, but for the day I will not lose more than this. Do you have those lower limits? Because if you have those lower limits, with iron discipline, you follow these lower limits, this will act as an external thing to control your desperation to make back your losses. Agree or disagree? Right? Any questions? I should move on to the next slide. How do you set up your trading desk? Feel free to ask questions anytime. Okay. Deepak ji says how to find opportunity. Right. I'll come to that when I do with charts. I show you examples with charts. You will get a knack of how I look for opportunities. And obviously, a good base of knowledge. So some of you over here whom I know are very professional traders have shared with me on the phone in the last 2 days or even before that how much training they have taken. A few of you have been trained by me as well. Training, learning, and a mastery in technical analysis is important. Simply because, you see, trading is not just a profession, it's a calling. It's a performance act. And any performance act like singing, dancing, music, athletics, sports, anything which is performance based has two aspects to it. First thing, for what things are performance based, the first aspect to perform or performance based art or craft, you can say, is the fact that you are fearless in your actions and you act at a very in the moment level. You're fearless in your actions, right? So you're completely fearless about how you're doing, and you don't have the hang-ups. Even public speaking is like that, right? Second, you root yourself to something. A musician roots himself or herself to the notes. An actor will root himself or herself to the dialogue and the lines. You need to root yourself to something to be able to act on the basis of that. Market is everything about timing. You can't just go there on the screen and whatever the market is, I'll just do some buy and do some sell, and I'll do some sell and some buy and I'll make money. No, it doesn't happen like that. There's a systematic way to do it in the most extraordinary and the best way. You just don't need returns. I mean, you just don't need returns. You just don't need that small income or that some thousand rupees in a day and everything. You need extraordinary jaw-dropping returns. That is what you aim for, right? So before you reach there, you need to plan. You need to carve out a path for the same. Prince asks, how much stop loss should be made in intraday? Well, that depends on two things: your size of your capital. Are we talking about on one trade, or are you talking about a series of trades? You see, when it comes to taking a stop loss on one trade, if we are talking about intraday, the time frame you are trading on the chart is not the daily chart or the weekly chart always. It boils down to the 15-minute chart, the hourly chart. So in a 15-minute and an hourly chart, if the market is expanding, and your entry point has become very close to your ideal expansion points, maybe it is breakouts, maybe it is certain bottom or low, okay, So in the 15-minute and the hourly chart, the magnitude of move, which should be the stop loss, will be low. So your stop loss in the rupee term should also be low. It cannot be something like 20,000 rupees. If the asset class you trade, I'm talking about one lot over here. So on a one lot, the general market volatility for, let's just take any stock, is say 4% or 3%. It goes up and down on average about 3%. So very volatile stock or a low volatile stock depending on how you look at it. And 3% basis, your average movement of the day is. And average movement of the day is 3%. So out of a 10 lakh rupee lot size, 3% is 30,000. That can never be your stop loss. Maybe 10,000 or 15,000 is the maximum stop loss you could go to. On a capital of 1 lakh, again, this I'm saying, capital also matters, and also it matters that what is the size you're trading, right? So on a 1 lakh capital, the maximum stop loss you could take is this. So on 1 lakh capital, if you go on options, it could be 5,000. If you lose 5,000, then you just kind of stop, don't trade. And if you're taking one lot, not options, you're taking a futures lot, that could be 10 to 15,000 in certain cases, and it could be 1 to 5,000 in certain cases, depending on the trade setup. Okay, so Sumit asks, what maximum percentage of trading capital can be invested in one single trade as a discipline? So as a position sizing rule, according to your capital, say you have a 2 lakh rupee capital, and one trade you want to take one lot. Now on a 2 lakh rupee capital, the maximum number of lots you can take is 2 to 3 lots. At the same time, if you see the quantum of stop loss on one lot, it will go up to 5%. So 5% of 2 lakhs is 10,000 rupees. So 10,000 rupees, you can take a stop loss risk of 10,000 rupees on a 2 lakh rupee capital. You can take 5,000 if the trade is such. Try to take the numbers which are small, which do not erode your capital. See, it is okay to make mistakes in the market, but you should be alive to correct it. That is the simple perspective. And it should not bother you. The position sizing should be big enough to make you something decent, but should be small enough to not let you worry about if it is a loss. Generally, it is spoken about 2 to 5%, but when it comes to a small capital, where the maximum lot size is, position size only you can take is three lots. At that time, this 2% will never be valid. It will go up to 5%, right? I hope I have answered it correctly. Addressed to both of you. Now, when you set up your trading desk, you can continue to ask any questions in between whenever I see, and I'm comfortable answering as I'm talking. All of you can ask me as many questions. If you want me to repeat something, I'll do that too. Now, setting up your trading desk. Earlier we spoke about how things should be from the point of view of psychology. Now, from the point of view of sitting through the markets. But when it comes to the real, actual, physical trading desk, should have an economic calendar somewhere around, maybe a PDF or maybe a web page somewhere open. Just keep a tab. Immediately or a few minutes before a major news, unless you're really sure of the trade you're looking at. You cannot afford to be too impulsive. Maybe the news time, the execution should be well planned. If it is well planned and things fall together, please take a trade. If it is not, then don't. But at least having an idea that the news is coming up will give you a certain, you will make you step back a little bit and understand that, okay, now I need to be a little careful and well planned. Number 2, reminder notes. So I really stress upon reminder notes because each one of us has certain traits, certain vices, certain good points, certain bad points while trading. And for each one of us, some other suggestion works. So I'll just share with you what works for me. What works for me is basically, uh, I like to tell myself that if it is the best trade I will find in the week, I will take it. If this is the best trade I think I would find in the entire week, I will take it. So I generally have that kind, something like, now I don't, but I've got conditioned to it. But in the process of getting more conditioned to it, I used to write it like that. I can also write, don't hurry, or also write, concentrate on just step by step approach. Like, you just make some money on one trade. Don't have more than 3 positions at a time. So I write that down. So whatever you need to think, you need to remind yourself, where you think there is a tendency for you to overdo or underdo things. So I like putting myself as much as an underdoer, because I know that in certain market phases I might find a number of trades opening up. I need to do so much which I can execute very nicely. Right. I also write notes about not how my trading performance is, but they are not even motivational in nature, because most of the things which are very motivational in nature tend to make you too impulsive. You see, I have a very fondness for reading very nice books, and I know a lot of very nice quality people who have fondness for the same. But if you agree, just raise your hands if you agree with me that the more continuous dose of motivation you will give to yourself, there is a chance that you will become very impulsive when it comes to taking action. This is not healthy in case of markets, right? You can raise your hands if you agree. So I like putting up certain maybe quotes or certain writings, things I have written, to set guidelines for myself to be in the present moment and perform, not out of any motivation, but out of a more detachment. Getting the point? Because that detachment roots me to the inputs. So if I'm rooting myself to the input, somebody just said, I think Murliji said that he made 45k in a day. But after making 45k in a day, he stopped doing the thing which made him that 45k. If he continues to do that thing, for the next opportunity, he'll make more money or that much money again. Right? So continuously keeping yourself in the orientation, the zone, and continuously doing the right things which lead you to the right actions is very important. So I write stuff like that when it comes to the notes. At the end, in many cases, in my case also, you are not sitting with a group, or you do not have a continuous flow of other things or entertainments or thoughts. Yes, I do have phone calls, I do have meetings, I do have students messaging me, calling me. I have consultations which I give for psychology, one-to-one consultations. But apart from that, when it comes to the markets and the trade timing for the day, I'm mostly alone. I'm mostly alone. There could be a time where I need to focus on the quality of my waiting. If I think that I've made it too fast too soon, I end up losing that patience. So a daily work on that is very necessary. Daily give 1 to 2 hours at least, I recommend everyone. I try to give at least like 4 days a week or 3 days a week. I give clear 1.5 hours, 2 hours to myself, and clear thinking that these are the basics I need to stick to. These are the new insights I'm getting. These are the new ways I find myself not just comfortable but motivated and driven to do the right things. So you need to write out those things. You need to express those things to even people you know. Those ways are the ways where you can, instead of instilling misery. You see, I've been to the outside the stock market drinking tea near Calcutta, even towards Bombay side and everywhere I've been. So wherever there's a stock market office group or near the stock market, you see at the end of the day, you'll see many people talking to each other like, I lost so much money, market is so bad. Another person says, yeah, market is the graveyard today, the market is the worst today. and I lost so much money. It made me, मेरे को बेवकूफ बना दिया ऐसा कुछ. How many of you had those kind of conversations? So people share misery. They love sharing the misery. And when they share the misery, they end up increasing the misery for themselves. So try and make conversations and friends also who talk to you about the getting back, the resilience. There can be good and bad times with anyone, with yourself, with myself, with anyone. But who talk about the resilience part. That is extremely important. To be in that resilient mode all the time. And then becomes a second nature. It started with me in college, so it was never a problem for me to get into a second nature. But the repetition of it and the need and the difference between the people who come to me and the space I find myself in has made me expressive about these things. So Pushpiji asked, will you discuss how to make a screener entry? Yes, I'll come to those things. Don't worry, I'll come to those things. Now let's come to the, now let's just finish this last part. Preparation and a well thought of trading plan. If I was to put in one word, what is the most important thing you need for trading? It's preparation. I believe in homework. So how I go about these things, how about the technical preparation, I'll discuss now. First of all, you need to very clearly define what is your edge. Right? What is your edge? If you can define what your edge is, you can understand which are your strong points. An edge is a probability of something happening or something not happening. Now, when you come to the different technical tools and the different strategies, what do they lead to? They basically lead to a space where the stronger hands that are going to lead the market in one direction, the stronger hands which are going to lead the market in one direction will give you certain clues, certain footprints. You will use that as a probabilistic edge that it is most likely for the market to go up or to go down. You will use these different kind of tools which are there, different kind of edge which is there in your bandwidth of knowledge and understanding to form a technical setup. Third point, those who know me from before, I have a keen interest in astrology, and it's said that the best of the people come with the best of the charts, and same thing is with markets. The best of the moves come with the best of the chart setups. There is the good charter setup which leads to a good move. You need to build a knack and develop a certain acumen to be able to perceive those moves. Not all moves will you be able to perceive, and it is not necessary to trade every wrinkle, but the good setups which are a combination of the edge you understand very well is very important. So a good technical setup leads to a good move. When you capitalize on this move, we'll come to target, stop losses, we'll come to trend following right now. When you capitalize, it forms you certain association in your mind, certain experience and association. And you need to recalibrate yourself every time to make the entire process more efficient for you. It is about repetition rather than a one-time event. It's about repetition. So once you become conditioned to doing the right things, you will become more and more efficient over time, right? So if you, for example, did not execute a certain portion of the trade properly, maybe your entry was a little hesitant, or maybe your exit was a little early or a little late. The next time you act more efficiently, the next time you act more efficiently. If you were undercapitalized on the trade, or if you are overly capitalized on the trade, even that has a problem with efficiency, right? Fundamental analysis keep a huge gap from it, especially in intraday. What is the essence of fundamental analysis? The essence of fundamental analysis is that if fundamental analysis concludes a price which is here and the existing price is here, over a period of time they will converge. It will reach. The essence of really what happens, this is what fundamental analysis talk about. I don't know how many times it happens. What really happens is, and what I've seen happens is, that if fundamental analysis talks about a price being over here and the actual price is here, it keeps swinging in extremes on both the direction. It keeps swinging in extremes. So it can be, something can be overbought according to fundamental parameters. Something can be oversold. So if you go and say, this has come up so much, the company is not valued like this. This cannot be the value of this company. So therefore I should short it. That's the most useless thinking. That means that the right nature and mechanism of the markets haven't been understood by you. There was a place I was sitting in, a restaurant I was sitting in a few days back, and I was waiting for my friend. So there was a group of people who were talking about, नहीं ये तो ऐसा नहीं होना चाहिए. This company cannot be priced at this level. इस शेयर का दाम 1500 रुपए है, इसका तो शायद 1100-1200 होना चाहिए. You see, the market dictates how much you make. When you make money, market dictates the price. You don't dictate anything. Fundamental analysis leads to an anchoring bias and leads to a huge reality gap. The shorter the time frame, the more the reality gap with fundamental analysis. So it is very difficult to capitalize something in the very short term on leverage if you're judging it by its fundamental intrinsic value. I'm not saying fundamental analysis is wrong or it's bad or anything like that. I'm just trying to say it is not the reality when you're trading. You cannot put a number that the market will give 50 point extra up if there's 2 millimeter more of rainfall somewhere. When it comes to news, time and again, it's been so many years of so many people watching CNBC or any other news channel, clearly talking about some news which comes out, and if the price has gone above the expectation, it is just stated that it's got above, it's a surprise in the prices, not above the expectations. If something was a good news and went down, is it despite the very good news it went down? Maybe it's profit booking. These kind of arguments in the aftermath, these kind of points in the aftermath will endlessly and always be there. That does not define fundamental truths. If somebody says that fundamental analysis is good for long-term investment, yes, for long-term investment is very good. That's the right thing to do for long-term investment. But for the short term, for the leverage trader, it is not important to do fundamental analysis. Yes, I admit that during news or before news, you should be a little more, put a tab on yourself, because what tends to happen is that with the news, new movements can trigger. New setups, technical setups can be found after the news. The price can take some triggers of the news. But you don't have to be attached to the news, but to wait for the triggers which you might get after the news. So in those cases, you wait for the market to settle down after the news. With moves, setups will be always there. And those setups will lead to good moves, right? Number one, the different technical tools. First of all, the basic classical patterns. Now, out of the things which are written over here, how many of you have some basic idea or knowledge of technical analysis of all these edges over here? How many of you have a basic idea? You can raise your hands. Okay. So let's talk about the basics to start with. What are the different technical tools out there? The classical patterns, they're the basics. So when you talk about the different patterns, some are very rare patterns which not many people talk about. Some are looked in a different way, etc. When I talk about basic classical patterns, I just don't mean to say that markets move in square and boxes or triangles or bottoms and tops and triple tops and double bottoms, etc. Markets don't move in that. Market moves in waves. They don't move in squares and boxes. But what the classical patterns do for us, all the way starting from supports and resistances, all the way deep into the various patterns, and how well you can look at those patterns, they define a structure of the price. The signals are led from the structure of the price. After I define all these edges, I will come to some examples of each one. It is define the structure of the price. Second, confirmation. During the day, each one of you, depending on your experience, knowledge, and logic behind that, there will be certain set of indicators which will give you a very soft information. It will not be related to a entry point, but after you get an entry point, or parallelly when you get an entry point, those confirmation could be like volumes, could be like market breadth, that is advanced declines. So for example, Nifty gaps up and then it is making some pattern in the 15-minute chart, and then you look at the same time what are the volumes, are there more advancing stocks than declining stocks, to give you an additional confirmation, softer information though, additional confirmation of the particular edge. So starting with this example, let's take Nifty only. And while I was talking, the very example which I took a few days back, right? So there is a trade over here. So there was an entry I took over here. For the convenience of everyone, let me just say, this is the 15-minute chart. This is the hourly chart. And this is the 15-minute chart. And this is the 5-minute chart. I would rarely go down to the 5-minute, but I would recommend not to go below 15-minute. 15-minute, you should watch if you are intraday trader. So my ideology is that patterns and all are obviously there. Patterns show me the structure, but the bigger time frame is very important for me. The larger time frame, the daily charts have been an uptrending daily chart, uptrending time frame. In the daily time frame, the trend is up. On the hourly time frame, also the trend is up. So what I saw, then the hourly time frame, the trend is up. However, there is a bearish candle over here. There is a cup and handle pattern which was under formation. So until the cup and handle pattern, things were not ready. Okay, so the formation of the pattern wasn't there. I traded this from the handle. Now opening the 60-minute chart again, after the fall there was a base building near a gap zone. This base building near a gap zone told me that probably this low is a new short-term low. Okay, and if this is the base building, these become important support areas. Now I'm just trying to point out how carefully I'm looking at the placement of this pattern. Okay, the placement of this pattern is extremely important for me. Now if a pattern like that is placed where there's a strong green candle, where volume started kicking in over here, there's a volumes over here, rise in volumes, strong green candle. In this zone, which is an important interaction point by my softer indicator like volume, I look at there is a base building. Now I'm not going to define the pattern because in two different time frames this looks like two different patterns, but let's just say that there is a convergence of price like a triangle. Okay, there's a convergence in price. Price is contracting, building a base near such an area. Now as the price is contracting, volume is declining. One of the nature of patterns is that volumes come down as prices decline. The prices contract, and before the prices expand, you will see very less volumes. So when the price started expanding at this green candle, I took a long trade, a long position with a stop loss of this point. So my risk to reward was taken care of because the move I was looking forward to was sizable comparatively. I scaled down some of my position over here and the rest towards the higher point of the day. So my average would have been a move from this point till approximately this point with a small stop loss. Now automatically, even pictorially, you can see there's about 1 to 3, 3.5 risk reward ratio. Waiting for the move to unfold was important, and sticking to the move with a stop loss well defined in place was important, right? So these are the few things which led me to a good intraday trade. So this was an example of patterns. How a pattern placed well in a certain area can lead to a good intraday trade. Second thing, let's take BPCL for example, since we spoke about it. BPCL also gave us a pattern which it was showing before the move came in. Now again, not using too much technical jargon, let me just make it simple for all of you that there is a resistance zone which is very clear over here. Now for those who don't know or know otherwise, the resistance is never a point, it is always a zone. Of course, some places can be a very narrow zone, but it's never a point, there is always a zone. So in this zone, price was, although in an uptrend, could not really go a bit higher. And finally on this day, there was a higher volume and increasing volumes and increasing rise in price. Okay, now after that, the price threw back on the resistance line, which is now a support line, and started rallying up again. Now this pattern where the final breakout had happened over here, I was not having a positional trade. Although it was on my radar, I did not take the positional trade. The next day, at the dip, it was relatively easy for me to perceive the trade which was coming through. So when this dip came in, there was a hammer pattern which is formed, and also the overall pattern on the daily chart was bullish. So the assumption of the daily bullish pattern led to a bigger move. Now in case of Nifty, the daily bullish pattern was not an immediate breakout, but an overall uptrend. In case of BPCL, the daily bullish pattern is an overall breakout, not just a trend, it is a fresh breakout. So when the move is begun fresh, the move is in its stronger parts, right? So what one can do is every day one can, to be able to trade intraday, you need to make a homework of what are the things you're looking forward to, what are the few stocks which you are going to look for 15-minute and hourly setups to be able to trade intraday basis. Now, one more example, since we discussed Cipla also. So Cipla was also giving a similar kind of candle, and there was a narrow range breakout on the daily chart with a decent volume candle. Now the next day, there was a beautiful pattern on the 15-minute chart, which I was able to capitalize over here. And there was a whole volumes supporting that. Volume supporting that. Okay. In case of Nifty, I forgot to mention, even advanced declines and option supported the bullish move. Option and open interest data. So whatever the software indicators are, if you know them in depth, if you know the nature and essence, you will be able to capitalize on them intraday. Use them as a confirmation for your intraday trades. Now, over here, speaking of the Cipla setup again, over here on the daily chart, the move which began was this day. The stronger part of the move began was this day. Okay, and the next day we saw that there's a bigger move which is happening. Now, for those who know a little bit of technical analysis, after breakout, if there's a running triangle or there's a consolidation after breakout, that becomes a very important point. Now, the ferocious intraday moves will only come about. The ferocious intraday moves will only come about when you are with the larger trend. When you are with the larger trend, the ferocious intraday moves will come about and you will be able to capitalize on them. Bajaj Auto has been one of the things I trade. There were ferocious intraday moves I was able to capture because my homework was ready. So your homework needs to be ready, and when your homework is ready, you can capitalize on the flow of the movement. So these are small examples, very normal examples, and then like smaller time frame examples also which I have on classical patterns, intraday patterns, confirmations we discussed. Now there will be certain sentiment indicators, like for example, what is the ratio of open interest of options and calls and puts. So if it is assumed that the weaker hands are buyers of options and the stronger hands are the seller of option, so higher open interest leads to the opposite side move. If you can see a particular instrument playing that out and you comfortably able to read that signal, you can use that as a confirmation indicator. You can go to my YouTube channel and you can look at a video, view the entire video of volumes and open interest. It will give you a lot of idea about technical and sentiment indicators, which are confirmation indicators like volumes and open interest. So we have done a lot on that. It's a long webinar, very interesting webinar we did. Next is momentum and volatility indicators. See, it is imperative to understand that momentum or volatility or expansion in price can be measured with a whole host of indicators, starting from moving averages all the way to RSI, from the very basic to the very advanced things. Okay, now giving you an example over here. This is a day after Diwali, a day after the Diwali move over here, near the lows of this day, which is also near the, Elliott wave theory is also one thing. So the base of wave 4 is generally a good support. We're not going too much into it, but this is a basic idea of Elliott was also there. However, a strong zone of support from where the market again gapped up the next day. Prices come back to that. And when prices come back to this area, there is a base building which is done on the 15-minute chart. Now let me pick up just one simple indicator, the relative strength index, okay, and just talk to you about the fact that on the hourly chart, this comes to its very crucial support zone near 40 levels. Now these hourly range or daily range or RSI range are something which you may not have read about, because generally they talk about 70 and 30. But nonetheless, it comes here and there's a positive divergence over here. That means the price is tired of going down, and when it is too exhausted on downside, the idea of a stronger pullback is always more prominent. Okay, and then that led to a one-sided up move. This was a trade I was not expecting, but I got it pretty immediately. So when the support is taken over here, how the price expands, how the volume expands, these will be very crucial points to notice when it comes to the placement of patterns, right? Now that was on momentum and volatility indicators. Speaking of more examples later so that we can combine a few things, let's look at the Elliott wave principle. Now the ideology of Elliott wave principle will be difficult to understand for those who are not acquainted with it, but I'll give you few examples where we will understand what Elliott wave principle goes to leads us to, and how we can capitalize on it with amazing risk rewards. Okay. The last point is candlestick charts. Now, Japanese candlesticks are prevalent, but for most people, they're mostly candlesticks are just red and green lines. For those who want more information on candlesticks, you can go to my YouTube channel and watch a video on candlesticks. It will be very enlightening for you. It has really benefited a lot of people. They've really thanked me for that video. So candlesticks are indicators or technical tools which define that flow of price. Define flow of price. Where patterns define a structure, candlesticks define a flow. When patterns define a structure of price, candlesticks define a low. So you just put my name on the YouTube channel, will come to you. This video will also be uploaded on YouTube. So I look forward to uploading this video on YouTube as well. So when candlesticks define a flow, you have to understand what are the elements in a candlestick chart which will help you to capitalize and perceive the flow out of a pattern according to Elliott wave principle, according to the volatility indicators, etc. So a rough idea about the setups, and now we focus more on the example, right? Now we focus more on the example. Let me give an example of SBI. So there was a huge move. Now we all know that Elliott wave, on a very surface level, people have heard Elliott wave theory talks about a wave 1, 2, 3, 4, 5, and 1, 3, and 5 are the trending waves, whereas 2 and 4 are the declining waves or the corrective waves. So in case of uptrend, the 1, 3, and 5 will be the waves which will be the defining up moves, whereas 2 and 4 will be the down moves. Okay, so the day price is gapped up on SBI, and this is one reason to be completely detached with the fact that how high or low the price is, the markets are a money vehicle. So I was not jittery in buying at that price, so I did not enter at this point. So this was early in the morning, 9:15, 9:30. So around 10:30, the setup started happening, and this is a 15-minute chart. On the hourly chart, it looks like this. On the 15-minute chart, so hourly chart trend is extremely strong. On the hourly chart, it looks like this. On the 5-minute chart, On the 5-minute chart, there is a flag pattern also. So on the 15-minute chart, which I would like you to be in most cases, when the momentum and volatility is very high, even the 5-minute and the minute chart will look very clear to you because the clarity of the move is present. In sideways market, even hourly chart may seem noisy to you. Getting the point? So you need to switch your time frames of looking at things according to the flow, the movement and momentum in the particular stock at that point of time. Anyway, so my ideology was that when the stronger moves happen, they are generally the wave 3 or the wave 3 of 3. This move made a higher high in a weekly time frame or probably a monthly time frame. This move was most likely a 3 of 3 with a gap up. Okay, so over here the 3 of 3 ends and there has to be a 4 and a 5 to complete the wave. So my idea is that after the market dips a little bit, I will try to see what will show me that probably the subwave 4 is over. If the subwave 4 is over, I can capitalize on it. So on the 15-minute chart, obviously the hourly charts are extremely strong. On the 15-minute chart, I see a hammer pattern. I see a hammer pattern. I also see that with the decline in price in the first 1.5 hours, the volume has declined a little bit. So there has been a strong move and the volume has declined a little bit. So the volume and price harmony is maintained. On the hourly chart, there is a bullish belt hold line. It's called a bullish belt hold line pattern by candlesticks. So I combine my candlestick on 2 time frames with my rough idea that no matter what, Elliott wave theory gives me a highly probabilistic edge over the fact that they should lead to new highs. I have to just wait for how it will unfold. Okay, so at the hammer pattern, I was able to enter the trade for intraday basis. Right now, on intraday basis, if I'm entering the trade and if I'm capturing more than 2 to 5% of the move, it is extremely nice. So I happen to hold on and scale out with time, scale out the move with time and execute the trade intraday with an objective that this price, if I enter over here, it should make higher highs and continue the trend. So here I'm following the trend with a trailing stop loss. Any questions on this one? So this is how I apply Elliott wave theory on an intraday basis. Or in another situation, say for example Nifty, and I'm talking the hourly chart. So how do I define Elliott wave over here? So on the hourly chart, okay, I'm converting this into a daily chart. Now over here the low point is 9685 and here the low point is 9687.5. So this is not made a lower low. Over here this could be an ABC because within the trend of this move there is a subdivision. There is a subdivision. So I have not uploaded that back data in the daily, but fine, there is a subdivision. And in the recent where I saw the prices were going higher and higher, as they went higher, there was a red candle one day. Now, the next day, the red candle did not follow through. First of all, this is not a very strong bearish engulfing candle, if those who think this is a candlestick signal. Secondly, on the hourly chart, there was a cup and handle pattern, okay, which is over here. So I'll just zoom it a little bit and make it 15-minute chart for your convenience, right? Now, if I count the waves from here, this looks like a ABC. I'm not doing a minute wave counts to confuse everyone, but I'm just trying to say how I'm being able to use this as a corrective wave. This approach is a corrective wave. If this is a corrective wave, and this is a first impulse, and this is the correction, the part of the move which is coming with very high volumes and breaking out of a cup and handle pattern also is a very strong move, and this strong move should be held on to. So as an intraday trader, of course, I made money on it, and some positions I left for the next day, anticipating a gap up which did happen. Am I get resonating with you? How I am going to put together the different technical tools? Are you understanding how the different technical tools are being put together? Right? So Elliott isn't for long-term charts alone. So Elliott is not for just long-term charts. Elliott is for different charts. So we're not even discussing long-term. In the long term, Elliott can show much more magical and much more low risk, high reward moves. I'm talking about only intraday. And even in intraday, with subwaves, if you are able to identify waves, it will be a little practice, but you will eventually be able to identify the subwaves. And Elliott is so much valid till every tick. Then in my experience of technical analysis of all the various topics and subtopics I've gone through, nothing is more potent than Elliott wave theory. So when you see the breakout happening from that cup and handle pattern, you enter the trade with the flow. You enter the trade with the flow. And when you enter and hold on to the trade, now any lurking question in anybody's mind regarding how do I enter the trade, or what is the stop loss when I enter the trade. For that, you will have to subdivide into the pattern and look at the move where it started from. If it's a breakout move, where the move's momentum started from this point, the low of this candle could be your stop loss. So that even if there is a throwback a little inside the pattern, your stop loss is not hit. If you are trading intraday, if you sort out stocks in different time frames, you need to make a clear homework chart that okay, these are the 5 stocks I'm going to closely track today. Because their daily trend is this much, their daily recent breakouts have happened, or there's a daily reversal candle. So for example, TCS. Over here, we saw that there were strong green candles coming out of a base. So this day I did some homework from my end. And when I did some homework from my end, I was able to again capitalize on the intraday breakouts. Again capitalize on the intraday breakouts. So those things are things which you need to really understand, that a combination of setups is extremely important. The precision of your trading, as Pushpi ji asks, the precision of your trading highly depends on how much you read the flow of the pattern. This is the difference between a positional trader and an intraday trader. Precision is not a tactic or not a strategy. Precision is just spontaneously acting. First of all, intraday charts are a little more noisy than the daily charts. So it is extremely difficult for the not so practiced technicians or technical analysts or traders to be able to capitalize on perceiving those moves in the moment. But once you are able to do that with practice and look for the clear setups by combining a few technical tools, you will realize that it is not difficult to act spontaneously and with the flow. The now moment opportunity flow should be acted upon. That is the only precision tactic. But to be able to perceive the flow, you need to be prepared before the flow happens. Are you guys resonating with me? Any questions? No questions? Of course, there are more different kinds of setups. So my ideology was that we should take up some tools and discuss individually and combination of what can happen, and something from the recent markets. Something from the recent markets would be good. So I discuss things from the recent markets, and there can be both bullish and bearish kind of moves, which will be something you will be able to capitalize on. So, for example, on the day of Diwali, I'm taking basic examples of Nifty so that everyone who is, you know, everyone would be trading in common in general. So on the day of Diwali, we defined a well-defined support level on Nifty, a very well-defined support level on Nifty. In fact, some student only messaged me this. So on this well-defined support level, with the price cracked, you had to precisely act with the flow. Only if you are able to act with the flow, you will be able to capture the move. And this is what happened. That with the flow, it reached to an equal half of the move in the point. So that this move alone made me probably like 80 to 100% on the options I bought intraday. And you all can do that as well. All you need to know is perceive that every day and every week is different, and wait for the market, detach from the time and the hurriedness to make the inhibition to make money too fast too soon, and you'll be able to do so. So in this video, for those who are watching it online, for those who are watching the recording, for those who are attending the webinar live, I will be putting up this video on YouTube, and I will be writing in the description box on how you can contact me. There is a web session course I run, which is a 20 session detailed course with depth of technical analysis with 2 to 2.5 hours of class each on weekends. So if anybody is interested to join the course, which is called Technically Sorted, you can contact me personally or otherwise. Our course coordinator, Ashish Dalmia, even his number I will give in the description box, and you can get back to us with wanting the details of the course. I recommend all of you for your learning to go through each and every YouTube video which is available in my YouTube channel. All of them have been made with a lot of precision and work in terms of being able to give you the best out there. Obviously, because of lack of time on every topic, I cannot go completely in details. For that, always you can join the course. The fees is a normal 15,000 rupees. But at the same time, just the YouTube videos have so much information to give you a lot of improvement points in your trading. So you can go out there and watch them. I hope you like this session. I hope this gave you some insights. I hope, now I'm not the person who would give you the fake reality that you follow this indicator and every morning if this happens you should buy, and every morning if this happens you should sell. I really believe in the reality which is out there, which is doable and tradable on daily basis, on on moment to moment basis. What I believe in is that no indicator is really holy grail. So if that was an expectation someone came from and that hasn't been fulfilled, then it's okay. I cannot really help it, because the reality is far from that. The reality is that you have to have a creative approach towards trading, and all the variables which are there, be it any indicator, be it any tool, be it any pattern, be it any candlestick, any indicator, which we plethora of indicators which are there, none of them have a linear relationship with the market. There is always a non-linear relationship with the market. Okay, so if this happens, this will happen. There's no relationship like that. You have to understand that it's highly probabilistic and it's highly non-linear. You have to just find the spaces where the probabilities are high and there is a similarity with what has happened in the past. For that, you need to practice from the past. So for those who want to excel with all the knowledge you learn, You go back to the past and see what you could have done, when you could have done. See what time of the market what happened. See how the volumes came down and went up again. See what are the patterns, see what are the placement of the patterns. Go look at the candles, look at how the market behaves at the opening. Now at the opening, once the market opens 1.5 hours, there's a trading range and there's a breakout on either side of the range. How does the market behave? Those are called opening range breakout trades, which happen at the market open. Now they may present themselves every day in the same manner, but they may not. But if you don't define it and you go by the basic rules and proper depth of knowledge of the tools of technical analysis, you will be anyway led to these kind of trades. So there could be days where markets could go in the two directions about 2 to 3 times. Those will be volatile days also. But if you capitalize on them, you could take directional trades on either side. It is not necessary that the market goes up 120 points and you will have to make money. It's okay. As long as you do the right thing over a period of time, you will make money. No fear of regret, and taking money, trading as a money vehicle should be the key. If anyone has any key takeaways from this webinar, you can share over here right now. If you have to ask any questions to me, you can ask right now before we end for today. Okay. Thank you very much. Yes. Thank you. Thank you. Thank you very much. Thank you for acknowledging. It is extremely important for me to make things simplistic for people who are new to me. All are not students. With students, it gets advanced with time and in the course. But with people who are new, it is the major part of the work is to make it as simple and straightforward as possible. So do your homework, stay dedicated, and keep forging forward. Understand that you are a human being and go step by step. And I hope this really gives you a lot. Go to the YouTube channel, watch all the videos, especially the psychology ones. And for the ones who are new, there's a video called Trading Psychology Part 2, a technical approach to trading. That also talks about technical analysis a lot. And set up yourself to trade, be a day trader with a lot of discipline, but with a certain ease. The thread of attention is very important between you and the market. And if you are expecting yourself to make money without giving time to the market, you're making a wrong expectation. And if your schedule or other profession does not allow you to give enough time, it's okay. It's okay not to trade intraday. Or it's okay just to trade intraday if those 2 hours give you even one trade in a week, right? The idea is not to be compulsive and look for action, but to be very methodical and follow the plan, condition your mind to follow the plan and become more efficient over time. So thank you so much, and thanks for acknowledging. I'll see you sometime else, and keep in touch. Bye-bye. Thank you very much. Muliji, I can answer that offline. Bye-bye.